Hello and welcome to Lecture 4, Vendor Audits. Actually, vendor audits are a hot subject for customers. They are a source of worries and headache, and they are a big source of revenue for vendors. In this lecture, we will go through audits to explain how to mitigate the risks. Also, we'll explain what motivates the vendor to target a certain organization for audit. Software vendors, as investigated by IDC, are continuing their aggressive practices of auditing their customers for software license compliance, with 63% of companies being audited in the last 18 to 24 months. This is not an isolated incident, as 37% of the companies claim to have been audited 2 or more times over the last 18 to 24 months, with a focus on large companies. That's to say, a company being audited 3 times or more. Besides the significant effort that these audits represent to the companies, 16% of the audits took more than 6 months to complete, according to Express Matrix. They also represent significant non-planned costs for the companies, with 10% of the companies claiming to have paid over 500,000 euros for each contract year. Furthermore, considering that software costs are increasing every year and represent nearly 25% of the IT budget of companies, according to Forrester, and that compliance with legal and contract requirements are mandatory for each organization, it's clear that this should become a top-level management. Nevertheless, the endless number of software products, the different hardware platform where these are installed, the different license metrics and the contract and different specific licensing rules are a challenge when a company needs to perform a compliance reconciliation. With the cost of implementing an asset management program being significantly less than the out of compliance and additional license fees, as according to Gartner, especially if no processes, teams, and automated solutions exist to support the same function. We see here a survey done on 2 types of organizations, audited and non-audited companies, and the survey was focusing on the factors that would make it hard for the organization to achieve compliance and thus makes them subject to financial penalties when the audits take place. We can see here that there are 8 factors, and the audited companies seem to have had a major issue in all of them, and they are ahead of the non-audited companies in 5 of the factors. It's very clear that the vendors know very well which organizations to target. In this slide, we demonstrate the technical challenges to achieve compliance in the same organizations, and as we see, audited organizations are ahead in the aspect of size of the organization, server virtualization, and diversity of software portfolio. To address top-level management concerns, internal audit departments have begun to conduct software training awareness and software audits on regular basis in order to promote software compliance with their end users. This means the employees. The same principle has been followed by the software producers, that in 1961, software producers decided to be more proactive and created the Association of Data Processing Service Organization, that together with Software Publishers Association, later on changing the name to Business Software Alliance, BSA. BSA began to conduct software training awareness and software audits on a regular basis with their end users, the companies, through their compliance departments. The direct cost of software is not the only saving point. According to a recent License Dashboard survey, where License Dashboard is a leading company in providing SAM tools, 59% of all respondents had received a software audit request in the last 2 years, and Gartner state that the average cost of an audit is $500,000. The financial cost of non-compliant is being significant. Most organizations are typically over licensed for 60% of their software and under licensed for 30%, according to Gartner. These compliance departments usually establish compliance programs that ought to be applied to all companies on a regular basis, every 3 or 4 years, with the reasoning that compliance is now widely accepted in several geographies around the world, for example, North America, Europe, Asia, and Australia. It's also a fact that revenues are declining for software producers, and these are seeking to supplement their bottom line with new licensing fees. Threats of audits and lawsuits, and even raids on businesses causing disruption or shutting down operations. As determined by a specific contract clause that defines how the compliance program is to be applied, the software producer demands customer using their own teams or with the support of external auditors to provide a license position, which can be a very painful exercise depending on each company's software asset management maturity. IDC has determined that the time and effort spent in a software audit is mentioned as the major concern, nearly 70% of the cases, and in average, a software audit takes more than 3 months to be completed, nearly 45% of the cases. Therefore, it's critical that companies are able to duly prepare themselves to face an external software audit. According to the survey conducted by IDC, more than 50% of the companies had to deal with an external software audit over the last 2 years. One of the major unknown expenses in software asset management is the cost of non-compliance. That's to say, the cost of a software audit from vendors such as Microsoft, Adobe, IBM, SAP, and Oracle, to name but a few. According to Gartner, your organization has a 63% chance of receiving at least one software audit request in the next 12 months. As software audits are one of the main reasons an organization would implement a SAM program, it's probably helpful to take a look at why vendors would audit end users. So why do software vendors audit end users? Selling software is a commercial business. Those publishers that rely on license revenues to fund their continued operations naturally have a strong inclination to ensure they are maximizing their revenues, especially at a time when IT budgets are constrained and new software expenditure is reduced. With over 60% of software vendors questioned saying they audited as one method of generating additional revenues, this should come as no surprise when figures released annually by the Business Software Alliance suggest that globally around $59 billion of software is used illegally. That's to say, without a license. In key markets, the claimed piracy rates are still considerable, like in the US 20%, in the UK 27%, and in Australia 27%. Here we show the criteria upon which the vendor decide which organization he shall target. First factor is inconsistency in purchasing, which gives the impression that the customer is buying without clear strategy and that the license environment must be growing without proper management and controlling. Second factor is history of poor compliance. This doesn't need much explanation, I guess. Third is customer size, because the bigger the environment, the more difficult it becomes to manage the licenses effectively, and thus there would be a high probability of having gaps that would lead to applying financial fines on the end user. Fourth factor is mergers and acquisitions, as in this process, there are always software assets which drop or are not evaluated properly. Fifth factor is global footprint. As the organization is spread globally, this means that there are many branches abroad. This means there is a chance of having decentralized IT management and procurement management, which allows for compliance gaps. How to make your organization a less attractive target. The measures described below will help you both avoid arousing suspicion with vendors while also equipping you with the tools to start proactively managing software and realizing tangible savings. First, use volume licensing agreements where appropriate to enjoy discounts and have better management over the licenses, vendor, and supplier. Improve record keeping and centralize contracts. Thus, you will be able to find the contracts and evidence of purchase in one place as soon as possible. Define and document policies on software. Who gets what? Make sure that you evaluate the requirements of every employee in the company or in the organization, and make sure that the employee gets exactly what he needs of the software license. No more, so it will not be an overspending, and no less, so there will not be a disruption for the business. Define and deploy standard software builds. Define and deploy standard software packages, a general software package for every employee, and you can add specific packages, depends on the role. Someone in the warehouse would have some software or access to some database or application different from someone in the financial department, from someone in the production, in the marketing, in the sales, and so on. And so you have to implement a user profile for every user, and based on this user profile, you will decide his specific needs of software. And once he is sitting on his desk, you will push this package immediately without much investigation, and there will be no exaggeration in the requirements and no underestimation. Deploy an inventory solution to accurately monitor deployments. There are many tools and inventory solutions in the market that will help you to monitor what's deployed on your environment. And then you can measure the deployments versus the entitlements which you have purchased. Record licenses centrally and reconcile against usage. You have to record licenses centrally because it's reported that as time goes, 50% of companies lose the evidence of purchase of the license. So you have to record the licenses centrally, the evidence of purchase, and continuously reconcile your purchased license and their entitlement against the usage which is taking place to avoid any gaps. And if any gaps appear, you reconcile them as quickly as possible. Prepare ELP statements on a regular basis. An ELP means effective license position. So you prepare an effective license position statement on a regular basis. And in this ELP, you will state what license you have purchased and why, what licenses you have installed, and from these licenses which are installed, what are the licenses which are being deployed, and are these licenses which are deployed adequate? Are they more or less? And based on this, you reach some conclusions, and based on these conclusions, you can take actions that will help you to stay compliant and to save cost. Finally, negotiate audit clauses in license contracts. In every license contract, there is clause related to the audit, a clause that organizes how audit takes place. So you have to negotiate this clause, at least negotiate the written notice. It has to be minimum 60 days, so that within these 60 days, you will be able to evaluate your situation. You will be able to prepare an ELP statement. Even if you don't have expertise on house, you will be able to hire an external consultant, or expert, or auditor to make a health check for you so that you will be prepared for your audit defense. Thank you very much, and see you next lecture.